First off, let me back up and say, if your business is profitable, retirement plan is a fantastic tax deduction for you. Not only does it reduce your taxable income, so you get a tax deduction, but it also puts money in yours and your employees' retirement savings. So that's a double whammy. You're probably going to be retiring someday, so you're going to want to be doing that. So it should be a consideration for every business to put some of those funds away into a retirement plan. And so what type is best, or what types of options are available? It really depends on a lot of different things. The type of business entity that you are and the amount of funds that you have in the business, those are key considerations. But in general, most people are going to have the options of these types of things. There's a SEP IRA, there's a 401k, there's a simple IRA, there's both the traditional and Roth IRAs, and up at the high end, there's a defined benefit plan. So really, at the lower levels, you can every business can put into either like a traditional or a Roth IRA up to say $6,000 a year. And that's something that's good, something that you can save on your own. Even without a company, you can do those things. So, because you can save that on your own as an individual. The next level up are the SEP IRAs and the 401ks and the simple IRAs. And with those types of retirement plans, you can get up to $56,000 into a retirement savings plan. So that's pretty healthy. And you could get a tax deduction for that while saving that much money. On the high end, if your business can't afford it, you can come up with a defined benefit plan, and you can get over $250,000 a year put in those types of retirement plans. So very lucrative, but again, you have to have the cash flow to afford to put that much money in, but it's something that you should consider. It's all deductible, and that's something that's important, from a business perspective. Again, as I mentioned earlier, you're saving for retirement while you get a business deduction. So I'd say yes, you get a tax credit, because it is a deductible business expense. And then I will also say, there are some avenues depending on the type of plan. If you set up a 401k plan, there is an additional tax credit that you can get. So in addition to being tax deductible, you also do get some money from the government in addition. So it's kind of a double whammy. But with all that, I just want to leave you with this in terms of retirement savings. The most important consideration is really time in the plan. The longer you're able to save, the more benefit you're going to have. It's really because of the compounding of interest. Your gains, earning interest on the gains over years. So if you're saving now when you're early in your career, it's much more powerful than waiting to the end of your career, because if you're saving for 30 or 40 years, the compounding just works magic on your retirement balances. You can't catch up if you try to do it all at the end. And even if you put in a lot of money, you can't catch up with the slow and steady winning the race, the tortoise and the hare type philosophy. The tortoise is going to beat him if he starts early enough. So I encourage you to start saving now for your retirement.